Good evening, everyone, and welcome to the Sinking Funds webinar. We are excited to be here with you to talk about a very important topic within budgeting and to go over why sinking funds can help you reach your savings goals. My name is Leah Chayesky, and I am the Director of Bursar and Scholarships. Joining us this evening in spirit tonight is Felix Huertas, the Director of Financial Aid. Unfortunately, he is not feeling well this evening. We also have here Teresa Ortiz, the Associate Director of Scholarship, Adrian Diaz, Enrollment Bursar Coordinator, and behind the scenes, we have Haley and Yvonne from the Office of Financial Aid, as well as Gurpreet from the Office of Scholarships. Before we get started tonight, I just want to go over a few quick housekeeping notes. As always, in order to make sure we can all hear the conversation, all of our audience members' microphones are muted right now. Please continue to keep your microphones muted throughout the presentation. We encourage you to ask questions. However, we ask that you use the chat box feature. Any questions from the chat box will be answered during the Q&A session following the presentation. Lastly, if you experience any technical issues during the webinar, please let us know via the chat box so we can help. Building a sinking fund budget webinar. Using some of the tips reviewed in the Building a Budget webinar, we will demonstrate how you can successfully save money even on a tight budget. We sent you the link to the previous webinar in the registration email, but we'll also drop a link in the chat box and send you the link later on after the webinar. In tonight's webinar, you will have the opportunity to learn about key budgeting terms, budgeting tools and resources for savings, how to successfully budget for upcoming events and expenses, such as the holidays and upcoming semester. During the webinar, we will also break out into small groups to utilize a sinking funds worksheet, which can be used to plan for expenses in your everyday life. After the breakout session, we will come back together as a group to discuss some of the common themes that came up. And lastly, the webinar will close with a Q&A session. To begin, I'll now turn it over to Adrian and Teresa.
Hi, everyone. Today, we're going to be discussing sinking fund budgeting. This may not be a term you hear every day, but when it comes to personal finance, it's a term you want to know. So what is a sinking fund? You may find a few different definitions, but we thought Ramsey Solutions said it well. A sinking fund is a line item in your monthly budget that helps you set aside a small amount to save for a future expense. This is different than your standard budget categories that typically cover regular monthly expenses like rent, groceries, and utilities. A sinking fund is used for a planned, one-time, or irregular expense. So what kind of expenses can be covered by a sinking fund? Remember to keep one-time or irregular expenses in mind. Examples include birthday parties, vacations, events like weddings or anniversaries. You can also create a sinking fund for self-employment tax, furniture, or holiday shopping. These are the kind of expenses that we all have from time to time, or maybe a couple of times a year, but they often are not part of our financial plan. And with budgeting, it's all about planning. Without thinking about these irregular expenses ahead of time, you might be scrambling to find enough money when it's time for that trip to the vet or for your back to school shopping. Another way of looking at this, think about your savings as a target. And shrinking funds and sinking funds are the steps to help you reach that target. To be successful at reaching your target, you can't remove a step, or you won't be able to get to the goal at the top. To help us reach our savings goals, it's important to, 1, have a specific purpose in mind for the funds you're saving, and 2, do not use those funds for any other expenses. This is key to the saving process. It also takes some discipline. But if you can monitor your spending and stick to your budget, you're taking the steps you need to reach your next financial goal. As we talk about saving for one-time or irregular expenses, you may wonder how a sinking fund is different than an emergency fund. The two might seem similar, but they are actually quite different and should not be confused with each other. An emergency fund are funds put aside for emergencies or unexpected expenses. On the other hand, a sinking fund is used for a specific expense that you're expecting in the future. You're saving each month toward that one thing. In other words, an emergency fund is for unplanned expenses like a hospital visit or loss of employment, while sinking funds are for planned expenses like purchasing a new sofa or your child's birthday party. Sinking funds are planned, specific, and play an important role in our budgets. And to tell you more about that, I will turn it over to Teresa.
Thank you, Adrian, and good evening. You may be asking yourself, what is the purpose of a sinking fund? And that's a great question. The purpose of a sinking fund is to set aside money for a future expense or debt. As Adrian mentioned, there are many different sinking fund examples out there and many ways to set up a sinking fund. But the key thing to remember is that sinking funds help to offset the hardship of a large expense. For example, let's say you wanted to plan a birthday party and the most you want to spend is $500. Your birthday is in November, so in January, you decide that for 10 months, you will set aside $25 biweekly, or essentially every time you get paid. This will result in you saving $500 for your birthday over time, instead of trying to figure out how you will cover this larger expense come November. As I mentioned, sinking funds help you to offset a large debt or expense, but there are other reasons why sinking funds are important. Number one, it helps you to be proactive versus reactive, and it helps you to plan ahead for common expenses. If you know that you have a wedding to go to or that you will need to replace your car tires, a sinking fund can help keep you on track to reach these savings goals. Number two, with the sinking fund in place, you can make sure that you do not tap into your savings or your emergency fund when purchasing new car tires or taking a vacation. It allows you to keep from incurring new or additional debt. Number three, sinking funds give you the freedom to make extra purchases without feeling the stress or financial strain. This is extremely important for those months when an uncommon expense does occur. Number four, as you think about your non-monthly expenses more and budget for these items, you will have a clearer picture of what you can afford and when. This helps to reduce spur-of-the-moment purchases that might be outside of your budget. And lastly, we want you to remember whether you're saving for a new apartment, a car, vacation, or a laptop, setting up a sinking fund can help make your dreams a reality. In the breakout room session, we will be using an example to discuss in further detail how to plan and set up for a sinking fund. However, we will quickly highlight how to determine your sinking funds. Please do not feel overwhelmed by this explanation. Don't worry, we'll be going into more detail later in the webinar. First, you will want to review your annual income and expenses. This will help you to determine how much you can set aside for all of your sinking fund goals. Next, you will want to further think about your financial goals. It is important to consider any irregular expenses you have throughout the year, such as semi-annual car payments, yearly membership costs, vacations, holidays, etc. For each goal, the next step is to determine the amount you will need to save and how much time you will have to save the money. Lastly, by dividing your total sinking fund expense, or essentially how much you want to save, by the number of months or weeks you have to save, is how you calculate your number of sinking fund deposits. To better explain, we're going to take a look at Adiel and George's holiday sinking fund as an example. Adiel and George are preparing for the holidays. They'll buy 14 presents for loved ones, even though, including each other, it's really 16. They'll also host a holiday potluck at their apartment because having a potluck rather than a dinner reduces their overall cost since they won't be responsible for the entirety of the menu. They decide to allocate $35 per person, which would bring the total cost to $560 for holiday gifts. They look up some general suggestions on the cost of wrapping gifts, mailing out a few gifts, and also sending out holiday cards that cannot be presented in person, and come up with a total of $212 for gift materials. They'll want to decorate their place for the potluck and budget to spend $150. They'll Make sure that these decorations are reusable so they won't have to purchase new decorations next year. The grocery bill for the dinner is budgeted to be $266. Their total expected cost for the holiday then comes up to $1,188, but they decide to round up to $1,200. Since they're starting their holiday savings in September, they've given themselves 3 months to save. They're not counting December since they hope to have whatever funds they need ready by then. In their original budget, they put aside $84 towards gifts, which means in September, they have already saved $420 between the months of April and August. Additionally, in their budget, they set aside $346.28 per month into their general savings account. As a reminder, the total calculation for their holiday budget is $1,200, but they already have saved $420 and will save an additional $252 from their normal gift savings during the months of September and November. This leaves them with $528 that they budget for the holiday sinking fund. Ariel and George have 6 paychecks until their target date of December 1st, 2021. Their biweekly holiday fund amount ends up being $88, which is 528 divided by 6. And they will be transferring that amount from their general savings account to their holiday savings account. Remember, the earlier you start saving, the less you may have to allocate to reach your sinking fund goal over a period of time. Let's see how we can take another example and set up a sinking fund with a little more detail using a step-by-step guide and worksheet.
In our breakout group sessions, we will be discussing the story of Nicole. Nicole wants to return to school to continue her bachelor's. In March 2020, she began to plan for her return to college. She was so determined that she set aside $1,110 from her stimulus check for her school tuition. Nicole has not been in school for 7 years and believes it would be best to start slowly and enroll in 1 course per semester. She does some online research and decides that CUNY would fit her budget best. She calculates the tuition for 1 course and determines it will be $1,092.50, which is $305 per credit plus her student fees. It's now March 2021, and Nicole is proud of herself for not spending the money she set aside for her school tuition. But she realizes that she will need to buy some school materials, and it's better to start saving sooner than later. So she decides that she'll begin to save right away, March 2021. And her goal is to register for 1 course in the spring 2022 semester. To get organized, Nicole creates an Excel spreadsheet to easily review and calculate her current budget while brainstorming where she can set aside additional money for her school sinking fund. Her total biweekly income is $1,205. As you can see, she outlines her total expenses, such as rent, groceries, cell phone bill, etc. Nicole is also on a journey to become debt-free, so she has been sending an extra payment each month toward her credit card balance. Along with her minimum credit card payment of $82.76, she also sends an additional payment of $116.52 toward her balance each month.
After reviewing her budget, Nicole determines it would be best to stop sending additional payments to debt and focus on saving for her school materials. She knows this may be nerve-wracking, however, her focus is now school, and she is okay if she stops her debt payoff journey because setting aside a small amount for this large expense will help her not to increase her debt. Now that it is March 2021, she wants to set up a sinking fund for the spring 2022 semester. Her sinking fund target date will be January 21st, 2022. This allows Nicole to have set aside a small amount of money over the next few months. Let's see how Nicole sets up her sinking fund worksheet that she received from attending a free financial education webinar provided by the local community center. At this time, we will split the participants into the meeting into 3 breakout room sessions. Before we go into the breakout room, please keep in mind that this example is just based off of our research. If you decide to use the sinking fund worksheet for your own savings goals, please do not think that the budget amounts we use must be the budget amounts you use. Now for some additional housekeeping. The host will invite you to join the breakout room shortly. Please click Join Breakout Room. We will return to the main meeting session after 10 minutes and continue our financial empowerment webinar. If you need assistance or leave during the session, please notify the meeting host by clicking Ask for Help. If you have any questions or concerns, please share it in the chat box. We can answer your questions during the Q&A session. I think everyone should be back now from the breakout room session. We hope that everyone enjoyed and learned more information from the breakout room session. As we mentioned, Nicole's final sinking fund amount is $58.26 per pay period. At this time, each breakout room session had a discussion question. So now each group facilitator will discuss the comments and thoughts from the question assigned to their group. So I'm going to go ahead and go first. For our group, our question was, are there other school-related costs Nicole should take into consideration? And we had a great recommendation that when a student is filling out the sinking fund worksheet, that they should determine what other costs that may be specific to them where they are in their career. So for example, the example that was brought up in our group was that if a student is maybe earlier in their career or they're not working full-time and they need health insurance, that they would consider including the health insurance cost broken down in their sinking fund worksheet. So that way, when they do need to pay for health insurance, they're not hit with that full amount all at once because they've already saved for that. So I thought that was a good example. So the takeaway from our group was that while filling out the worksheet, it's important to determine what your needs are as a student, because that's going to be unique for every student. So if Adrian, do you want to go next?
Sure. So, we had some great suggestions too. One being, it's really important to sort of stay on track, and how can Nicole stay on track? That was the question that we were discussing. So one of the ways is really monitoring, how much you're paying on all these items, whether it's a little bit less or a little bit more, to make sure you're monitoring your spending and tracking your spending, so you can make sure you stay on track for those goals. Another great suggestion that we had was that for anybody that's able to think a little bit more ahead of time, you might be able to utilize a Labor Day sale or Black Friday sale to maybe get some of your materials at a discount. So that's a great way to save and stay on track with your goals. So, the more time you give yourself to plan, the better, the more you can sort of think creatively like that and give yourself the opportunity to save some extra money and make sure you stay on track with your goals.
Thanks, Teresa and Adrian. We also asked the question in our group, what other costs that wasn't considered. We were a little quiet. I think, it's later in the evening, so I'm also, ready to just go into bed. But we did discuss a little bit about, potentially for the iPad mini, that at the time of purchase, a newer version might come out. So in that case, to see if maybe the previous generation one is on sale at the time of purchase.
Awesome. So now that we've set up Nicole's sinking fund, it is important to keep in mind everyone's sinking fund setup is going to look different. But you want to remember, the more time you give yourself, the smaller the payments. Starting as early and as soon as possible is always ideal. However, remember, you can start at any point. The goal is to start and don't give up. If you're in a more comfortable position, please know you can definitely add more to your sinking fund savings. Everyone's sinking fund budget amounts will not be the same, and that's totally okay. The goal here to remember is a creative plan will help you reach your goals.
Before we wrap up the presentation, we wanted to provide you with some quick reminders and tips to help you with your own sinking fund. First, take some time to ask yourself, what would you like to save for this year? Consider your financial goals and any expenses you can plan for with your fund. Whether it's saving for an upcoming semester or the vacation you've always wanted to take with your family, a sinking fund can help you reach that goal. Start small. We know that these are difficult times and it may be challenging to save extra money right now, but try putting aside a small amount each month for one non-monthly expense. Remember, the more time you give yourself to save, the easier it will be to reach your goal. Don't be afraid to look ahead and start planning. Keep your funds accessible. You want to make sure you can access the funds you need when you need them. Consider using a high yield savings account, an account that's easy to access, but it also earns interest on your savings. It's a great option for your sinking fund. Remember, do not use your sinking funds for any other expenses. Once your account is fully funded, it should only be used for the planned purchase or expense. And consider separating your sinking funds. You can create a separate savings account, or some banks will allow you to have sub-accounts or savings buckets to help you save for different goals. Choose an option that works best for you. Finally, when creating a budget, it's important to make the saving process as simple as possible. Automate your savings if you have the opportunity. This is for your sinking fund or for any of your savings goals. By automatically saving each month, you are prioritizing your financial wellness. Also, make sure you track your spending throughout the month to ensure that you're following your plan. By tracking your spending, you'll be able to see where your money is going and determine if you need to make any adjustments. Most importantly, be patient. You may sometimes get off track with your savings goals. Life happens, but do your best to stick with your budget. And if you fall behind, that's okay too. Just take steps to get back on track with your plan as soon as possible. By taking these steps, you'll be in a better position to maximize your sinking fund and meet your financial goals.
Thank you. So now we are in the Q&A portion of our session. We did get some pre-submitted questions. But I'm gonna scroll through the chat. If any questions come to mind, definitely just pop them into the chat. So I do have one question here, and I'm gonna throw it out to either Adrian or Teresa. What software can be used to sync bank account and add budget info in real time?
Thanks, Leah. Adrian, I'll give my recommendation. If you have another one, feel free. So I, in the past, and I know that maybe actually Gurpreet can mention something as well, that there's something called, correct me if I'm wrong, Gurpreet, Mint Mobile. And that is something that, an app that you can download to tie your bank account information, and it'll actually help you budget on the app. Am I getting that right, Gurpreet?
Yes, that's correct.
And I know you have experience using it, right?
Yes, yes. So I actually have my high yield savings account connected with that, and I have my checkings accounts connected with that. I also have like my investment and trading accounts connected with that. So I have like, I can also like budget. So the app allows you to like set a goal, and it keeps reminding you, this is the amount you have to like deposit. You can also like do the automatic deposits. So that's really helpful. You get like a bigger picture of where your money is like coming and going. So that's really helpful.
Thanks, Capri. And I know there's another one, I believe it's called YNAB. You Need a Budget. They do have an app where you can track your expenses. But the thing to remember about apps is just to do your research and select one that works best for you and your budget.
Thank you. I don't see any more questions in the chat right now. So let me go to some of the pre-submitted questions. Mint Mobile is a cell phone company.
It's called Mint. It's by Intuit.
Sorry, my apologies.
Yeah, so we didn't mean to add the mobile part. So it's Mint by Intuit. Thank you. Okay. So this is kind of a general question. Do you have any advice, a recommendation on ways to save money with a tight income?
I can start with this one. So, I think when you're on a tight budget, I think every dollar, every cent counts. So really where you want to start is your income and your expenses. You want to take a really good look at both of those items, really just do a thorough review of your finances, and you'll start to see trends. When you're on a tight budget, it can be really hard to save. But when you're looking at everything, all of your spending, you might start to notice trends in your spending that you weren't aware of, or you might realize that things are actually a lot more expensive than they need to be. So, starting there, I think, is fundamental. And then from there, that's where you can get creative. I think it's really important to shop around. I think we have a lot of costs that are fixed, and there's really not much that we can do about them at the moment. But there's a lot of expenses, maybe like your cell phone bill, your insurance, if you're, part of any streaming services. There's a lot of things where you can shop around and find ways to save money. So those are some just general suggestions, just to sort of get the question started.
Awesome. And kind of related to that, do you have tips on how to stick to your budget? I'm going to say one thing, and I know it seems silly, but vision boards, I think they definitely help if you can visualize your goal. I think visualization of goals are great in general, and that's one way to help you stick to your budget. If you see that big picture. Teresa, do you have any other tips on how to stick to your budget?
Yeah, so two things that have helped me is to track my spending. Like Adrienne mentioned, that really helped me to identify any trends in my budget where I may be overspending, or where I may actually have to increase that budget amount so that I don't overspend. So that's something that's helped me. I try to track my spending at least bi-weekly, just to see where I've spent money. So I go through my bank account information, any credit card information, and really track out day to day what I've spent. The next thing that I recommend, and it's not because this is a sinking fund webinar, but I really am passionate about sinking funds, is you can set up small amounts for reoccurring expenses like groceries. We mentioned in the previous webinar, and that link will be sent out, but this is called cash envelopes, or you can even set aside what they call smaller sinking funds for, like, for example, my sinking funds are, I have a dog, I have one for him, and I transfer a certain amount every paycheck for him. That way I'm prepared when he needs to get grooms, when he needs his food purchase, and things like that. So I highly recommend tracking your spending to help you stay on budget. And also, if you are able to, if you know you have reoccurring expenses monthly, setting aside a certain amount for that. So that way, when it's time to make a purchase, you have money saved already.
I want to add on to this. So I think what helps me is save is setting up like the auto payment. So whenever I get my paycheck, like bi-weekly, I've set up like a system in my bank account where like a certain portion of my paycheck is gonna go like to the savings account. And definitely set realistic goals. Don't set unrealistic goals, and then you'll have to like go back and pull that money back. So yeah.
Right. And we do have a comment which actually leads perfectly into the next question. Saying no helps. I have bad impulses. I'm telling you, during the pandemic, Amazon became my best friend, and I totally get that. So I really do get that. I'm with you there. So with that, we did have a question, how to deal with impulse buys, how to avoid money pitfalls. So I would say, personally for me, what helps with the impulse buys is I literally wrote down, what did I spend in a month on what? And that caught me completely off guard. So actually just seeing it definitely helped. And the way that, one of the tricks I learned is to kind of use it as a reward. So I created, I also wanted to build some habits such as journaling, personal learning. So I made a habit tracker. And to kind of reward my buying, I set goals that if I completed a certain percentage of my habit tracker for a month, I would reward myself with a purchase. So that kind of helped me with the impulse buys. And sometimes, honestly, just taking a minute to stop and think, Leah, do you really need to buy that? Definitely can help. But to see the comments, you gave yourself a budget and spent the amount, it happens. I think one of the best things too, and will reiterate, is it happens, you analyze and you reassess, and the next day is always an opportunity to continue on. Adrian, Teresa, Gurpreet, anyone from the team, do you have any advice? And before you answer, we did have a suggestion, which is true, old school perhaps, but I have had times where I put my credit card in the freezer. That is a good idea. And then we did have another suggestion, no spend days or weeks are a good challenge. That's a great idea as well. Anyone from the team have any other suggestions?
I, like Leah and so many of us, are obsessed with Amazon myself as well. So something that I started to do, because it did get out of hand for a little bit, especially when you move into a new apartment or you are planning something, you just want to purchase everything all at once. So what I decided to do was I now wait 24 hours before I hit the purchase button. And that gives me time to really think about, and like Leah said, it gives me additional time to think about, okay, do I really need this item? And I kid you not, guys, honestly, most of the time I forget that I put something in my cart until I go back to it and I'm like, oh yeah, I wanted that. So that's something that has really truly helped me. And I do agree with Adeline's comment. I do have no spend day challenges or weekly challenges where I'll say I won't do any takeout this week. I'll just make sure that I cook everything at home and pack my lunch when I do go into the office. So those are my recommendations.
And just to build off of what Teresa said, I think convenience has become great, but I think those little things like Uber Eats, even Dunkin' Donuts has gotten quite expensive. So just taking stock of that, not to say to totally eliminate it, but maybe instead of buying a cup of coffee every day, brew a cup of coffee at home, and maybe once a week treat yourself to coffee. Yeah, daily latte habit. It's hard, but once you start identifying little ways, it could definitely help you reach your goals. I agree. Go ahead, Adrian.
No, I agree with you 100%, Leah. I think that's why really making it a habit to look at the numbers regularly is so important, because I think you can get creative there too. If you want to maybe spend some money on something that you really want, maybe you can get creative. Instead of getting those lattes, you're making coffee at home, or you say, you know what, I'm just gonna cook food a little bit different. I'm gonna cook in bulk, right, for the week, and I'm not gonna go out and grab that food from takeout or anything like that. And so you can find some room in your budget to play around with. But if you're looking at the numbers and really paying attention to it, it also, I think for me, it's always just a constant reminder, okay, I need to stay on top of this, because it's very easy, especially nowadays with Amazon and credit cards, just to spend the money that you don't really have at the moment.
And then Adeline also makes a good point to check subscriptions too. A lot of money was saved when Adeline ended subscriptions, which I think a lot of us can agree, Netflix, Hulu, HBO Max, to see maybe which of those end. And I think the common theme that's coming up is to shop around, especially for cell phone deals. Other cell phone providers, not necessarily the major ones, have pretty good deals. So definitely shop around for deals. That's ways to save money. Another pre-submitted question was, saving is difficult when living from paycheck to paycheck. Can it be done successfully?
So I just wanted to make a note on that question. I do think that saving is an option. I don't think that I think that sometimes as humans, we tend to focus on the amount that we can save, and we may get discouraged if it's not a lot. But I know for myself personally, when I started saving, I was only setting aside $20 every paycheck. And I don't want to say only, but that's what was comfortable for my budget. But what it created for me was the habit of starting to save. So not really focusing on the amount so much, don't get discouraged by that, but more so just creating the habit of saving. And then as you find ways to reduce your expenses or even increase your income, then you can start adding more to that savings account. But once you create that habit, it really does keep you going and keep you motivated. And agreeing with Leah said, having those goals, those visions. A good friend of mine bought me one of those picture frames where you could switch out pictures and you could put your goals in that. So things like that, just keeping that in the forefront is truly important.
Yeah, and I also, I know some banks have programs where, for example, if you pay with your debit card, they'll round up your purchase and put the change portion into a savings account, sort of set it and forget it. And those little things count. Like, I don't know if I moved, I had a coin jar and I just threw random change in it. And then when I moved, I had $200 saved up. So even little things like that, you're still saving. And it's just building the habit, like Teresa said, and celebrating those milestones. I know when I was a college assistant, all I literally could put away was $5 a paycheck, but I did it, and that was important to me to getting into those habits and celebrating those milestones. This is not quite related to sinking funds, but I think it is a good question. We kind of discussed it in a previous webinar. And Adrian, I'm going to throw this question to you. Is it worth opening an account with a credit union?
That's completely, up to you. I think with credit unions and standard banks and online banks, they all offer similar services. It's really important just to do your research. I mean, they are essentially offering the same things, but the trends are that credit unions tend to have better customer service, and they tend to offer lower interest rates. But a lot of banks are competitive with credit unions in that way, and vice versa with some of the services that some of the larger banks are able to offer. So I think sort of a point that we've talked about a lot today is shopping around. But personally, I've used a credit union before, and it was a huge help for me because they offered some specific programs to help people in my situation. I was looking for an auto loan at the time, and I was able to save quite a bit every month just by using their services for the auto loan as opposed to the auto loan that I got at the dealership. So I was able to save a lot of money that way. So I think whatever you decide, whether it's a credit union or a bank, it's really, really important to look at what are the services they're offering, what kind of programs do they have for their customers, what kind of interest rates do they offer you, when you're setting up an account with them, what perks there are, because there's a lot of great options out there. And with online research, it's easier than ever to see sort of what they're all offering. One website that I use sometimes is NerdWallet, and you can compare all these different types of bank accounts just on one page. It's really incredible, but it's a personal choice at the end of the day, and every credit union is unique. So I would say just do your research and find a company that's going to work well for you.
Thank you, Adrian. We did get 2 other questions. I just want to acknowledge we got them pre-submission, but they're beyond the scope of this webinar in terms of how to save for our home and how to plan for retirement. But those are actually 2 really good ideas for future webinars. So we will definitely take those ideas. And we do plan on doing some webinars in the spring, especially in February, which is Financial Aid Awareness Month. And in April, it's Financial Literacy Awareness Month. So thank you for the individuals that submitted those questions, you may have already given us our webinar topics for the coming term. So definitely stay tuned for that. I'm going to give it another minute. If anyone has any questions, to drop it into the chat or any comments. We're very glad to hear that. Thank you. Credit card 101. Yes, that is a great topic. I might choose to be on the other side of that one because I could definitely share a few stories of when I first started out on credit cards. So that's a great topic. How credit works. Great. Yes. Okay. We will definitely take that back and work on a webinar on that. Okay. So with that, what I will say is if any topics come to mind, we're going to drop 3 different email addresses that you could send email topics to. You can either email the Office of the Bursar, you can email the Office of Financial Aid, or you can email the Office of Scholarships with any ideas that you of webinar topics that you would like to see. We definitely want your input as well on webinar topics. And with that, I think that's it. I don't see any other questions. So thank you everyone for attending. This really was a lot of fun. And we do thank you for taking time out of your evening to join us. And we definitely hope to see you next time, and keep a lookout in your email for the links to this webinar and previous webinars. Thank you so much. Have a good night.